The IRS has a secret computer program that just waits for you to forget one specific form. If you had debt canceled last year, you are in its sights. Most people think a 1099-C means the debt is dead and they can just move on. It is not. If you report this wrong, the IRS will flag your return in 30 days.
That is exactly right. We are seeing so many people on Reddit right now in a total panic. One user said they are terrified of an audit because they missed a $600 form and already filed. Another got a bill for over $1,400 out of nowhere. This is the zombie debt tax trap, and it is hitting hard this year.
Have you ever received a letter from the IRS saying you forgot something? Comment yes or not yet in the chat. I want to see how many of us have survived an automated notice.
So, what is a 1099-C? It is a form the bank sends when they cancel or forgive a debt of $600 or more. The IRS views that forgiven money as income. It's like the bank handed you a bag of cash to pay off your debt. It scares people because it often arrives late, and most of us do not realize we owe taxes on money we never actually touched.
A huge misconception is that if you do not get the form in the mail, you do not have to report it. That is a dangerous mistake.
Exactly. According to IRS Topic 431, you must report canceled debt even if the form is lost or never sent. The IRS uses something called the Automated Underreporter System, or AUR. It's a computer program that matches the 1099-C the bank sent to the IRS against what you put on your tax return. According to the Internal Revenue Manual, this system is designed to catch every single mismatch. If the numbers do not match, the computer generates a letter without a human even looking at it.
That is the CP 2000 letter people fear. It's like an automated audit. But there is a way to handle this correctly, right?
Yes, the IRS has a rule called the Insolvency Exception. It's in Publication 4681. If your total debts were more than the value of your assets at the time the debt was canceled, you might not owe any tax on it. But here's the trick. You still have to report the 1099-C on your return and then use Form 982 to tell the IRS why it's not taxable.
Poll time. Did your 1099-C arrive before you filed, after you filed, or are you still waiting? Comment your letter, A, B, or C.
Let's look at a real example. Imagine a gig worker who settled a $5,000 credit card debt. They forget to report that 1099-C. 18 months later, that AUR computer finds it. On $5,000 of income, they might owe 15% in tax, which is $750. But because they missed it, the IRS adds an accuracy-related penalty of 20%. That's another $150. Add some interest, and suddenly a $750 bill becomes $1,000.
And they could have avoided that $250 penalty just by reporting it on time, even if they used the insolvency rule to pay zero tax. Which form does this actually go on?
You report it on Form 1040, specifically Schedule 1, Line 8Z, under Other Income.
Now, not everything is taxable. What are the big limitations we need to know about?
This is important. If your debt was discharged in a Title 11 bankruptcy, it's generally excluded from income. Also, student loans discharged between 2021 and 2025 are typically not taxable according to IRS Notice 22-01. The bank shouldn't even send a 1099-C for those. And remember, if you paid a debt settlement company to help you, their fees are not deductible.
So if someone is watching this and realize they have a 1099-C, what are the steps?
Step 1. Gather your documents and check the identifiable event date on the form. Step 2. Calculate if you were insolvent using the worksheet in Publication 4681. Step 3, file your 1040 with Form 982 if you qualify for the exception. If you're stuck, you can call the IRS resource line or check their website for Topic 431.
If you know someone who had a credit card charged off last year, send them this. They might be about to file without their 1099-C, which is an automatic audit trigger.
Just remember, I am an educator, not your CPA or tax advisor. This is general information based on IRS publications, not personalized advice. Tax situations vary. Always consult a qualified tax professional about your specific circumstances before making decisions.